So you're head on straight after the past 24 hours.
All you can do is chuckle, really.
Well, is that true? I mean, honestly, this is actually a really big question mark. Is it just eat popcorn and watch something that, as Anne-Marie said, was inevitable and wait for it to blow over before you continue? Or is this a new type of risk that any high-profile CEO is increasingly in the hot seat if they say something that seems at odds with the current presidential policy?
Well, the risk from a corporate perspective is there. We know that social media is very powerful, and there are consequences in things that one says or does not say. But the bigger question is, as an investor, how do you deal with this? And what we're saying is, what you really have to do is sort of barbell your horizons. Because if you look at yesterday, okay, when the tweets started, obviously first Tesla started falling, and then it infected the rest of the market, particularly a lot of the larger cap stocks. And then, of course, this morning we've bounced back. Great. In a bull market, there's lots of trading opportunities. But what you also have to do is, if you're thinking long term, you really have to think long term. Just set the noise aside, but increasingly more difficult to do.
War yesterday, potentially peace between these two today. Do you just buy the dip yesterday when you see Tesla shares down, I believe, at 1.18%?
Well, again, the market has been in mode now for the last several weeks where all the dips are getting. But our view here, again, is that when you see the degree of the reaction on a day like yesterday, it's telling you that it's becoming increasingly more of a challenge and that we're getting to the point, and frankly, we're going to see, perhaps in the payrolls report this morning and then next week's inflation data, news that may not be quite as favorable as it's been. So we think there's likely a transition coming here where the market is going to need good news to continue moving higher, and it may be mixed.